Hello everyone, Happy New Year. For those of you new to my video, welcome. My name is Shantae. I am an enrolled agent. I'm also the owner of SJC Tax Solutions. It's that time of year again. Tax season is amongst us. There are a lot of changes with the new Tax Act, and hopefully this video will help you understand what those changes are and how they will affect you. If you have not done so, please subscribe, like, and comment. And if you would like me to do a video on a specific tax topic, comment below. I'll be more than happy to do that. And the more interest I receive, the more videos I'll likely do. So don't forget to subscribe and share this information. I'm providing valuable information, and I would love for you to share it with your friends, family, co-workers, whomever can benefit from it. Now that we've gotten that out of the way and you've just subscribed, today's video, it will be focused on the new Tax Cuts and Jobs Act. The first topic are the tax rates. Of course, this has been the main question. What are the new tax rates? So the new tax rate includes 7 new tax brackets, okay? 10%, 12%, 22%, 24%, 32%, 35%, and 37%. Okay, the top tax rate was reduced from 39.6% to 37% and applies to taxable income above $500,000 for single taxpayer and $600,000 for married couples filing a joint tax return. The tax rates for net capital gains and qualified dividends were not changed. The standard deduction has changed, and this has been another common question. What are the new standard deductions and how will they affect me? So here they are. For a single taxpayer, the standard deduction increases to $12,000 from $6,350. For taxpayers claiming head of household, the standard deduction has increased to $18,000 from $9,350. And for married taxpayer filing a joint return, the standard deduction has increased to $24,000 from $12,700. The personal exemption deduction has been eliminated. So overall, you would think that the standard deduction, the increase in the standard deduction, will make up the elimination of the personal exemption. That's not necessarily the case. Another change is the qualified business deduction. Taxpayers are allowed a deduction equal to 20% of their qualified business income. Okay, so also known as pass-through income. So as corporations, partnerships, sole proprietor, it has to be qualified business income that you receive either pass through on a K-1 or pass through from your Schedule C, and the income must be from a trade or business that's performed in the U.S. The deduction applies to your taxable income. So it's not a credit, it is a deduction, and it's 20% again of your pass-through income from your qualified trade or business. The child tax credit has increased, okay? Previously, the child tax credit was $1,000 for each qualified child. That credit has increased to $2,000 per qualified child. Only a portion of this credit is refundable. The refundable portion of this credit is $1,400, okay? So the credit applies to children under 17. That hasn't changed. That's always been the same, and includes a non-refundable credit of $500 for a taxpayer's dependent who are not a qualifying dependent. Okay, that portion is new. So let me just reiterate. The child and family tax credit has increased from $1,000 to $2,000 for each qualified child under 17. Okay, and the new portion of that is there is a non-refundable, again, non-refundable credit of $500 for dependents that do not qualify as a qualifying child. The itemized deductions for state and local taxes has been limited to $10,000, okay? So that includes the state taxes that's reported on your W-2. You're only limited to $10,000. Mortgage interest on loans used to acquire your principal residence and your second home is only deductible on debt up to $750,000. That's down from $1 million. Let me clarify that. So you can only deduct mortgage interest on your primary home or a second home for home loans up to $750,000. Okay, and that has been decreased from $1 million. And also you can no longer deduct mortgage interest on home equity loans. Okay, the next topic are miscellaneous itemized deduction. Now, this will affect a lot of people. So there is no longer a deduction for tax prep fees, investment expenses, union dues, and unreimbursed employee expenses. Aha! If you are someone that you typically deduct unreimbursed employee expenses, that is no longer valid. That has been eliminated for 2018 tax season. The itemized deduction for casualty and theft losses has been suspended except for losses incurred in a federally declared disaster area. Moving expenses. The deduction for job-related moving expenses has been eliminated except for certain military personnel. So if you move to another state to take a job and you have out-of-pocket moving expenses, you cannot deduct those in 2018, again, except for certain military personnel. Healthcare. Starting in 2019, this year, there is no longer a penalty for individuals who fail to obtain minimum health coverage. Bravo, bravo. I'm sure a lot of people are happy about that. So if you don't have health coverage, or you haven't maintained health insurance, or unable to maintain health coverage in 2019, you will not be penalized for it. Okay guys, that's it for this video. I did not focus on every single change in the Tax Act. I just focused on the things that I felt would affect most taxpayers. But hopefully this video gave you a good idea of how the change will affect you. If I did not cover something that you would like to know more information about, feel free to contact me. You can email me at Shantae@shctaxsolutions.com. You can also visit our website, www.shctaxsolutions.com. Again, I hope this video was very informative. And again, don't forget to subscribe, like, and comment. Until the next time, have a blessed one.